Professionals working in the insurance industry know that car insurance rates differ from one car to the other. To the non-professional, however, factors that determine the different rates used on a car may not be all apparent. For example, most car owners do not know that altering their coverage from one insurer to another may mean that their insurance rates could change. Before delving into the practical details of this subject, however, this article must underscore the importance of car insurance. As crises managers readily tell, taking an insurance cover is one of the surest ways that a car owner can eliminate or minimize the risk associated with motor car ownership. Factors that affect the car insurance rates that one pays can be summed up in 10 brief points. First, the amount of deductible fees that one is ready to pay per month. Second, the safety components featured in the car, for example safety belts, anti-theft systems, and anti-lock brakes among others. Third, the car owner's credit rating is also a key consideration for many insurers. People who have higher credit scores are perceived as responsible and trustworthy, and are therefore more likely to be rewarded with lower insurance rates. Fourth, insurers consider the number of vehicles one has before deciding on the car insurance rates chargeable. The higher the number of vehicles one owns, the lower the rates he or she is likely to get, especially if he or she chooses to purchase their cover from the same insurer. The rates may, however, be affected if different drivers handle the cars. Insurers assume that a car that does not have a consistent driver is exposed to high degrees of risk. Fifth, car insurance rates differ according to the age of their respective owners. Car owners aged below 25 years are, for example, more likely to pay very high rates compared to owners who are in the more mature age bracket. The assumption applied by insurers is that the younger the owner is, the more likely he or she is to engage in car-related activities like high-speed driving, or nighttime driving. As such, the insurers argue that the probability of a younger owner becoming a victim of car theft, or getting involved in accidents is higher compared to the older owners. The sixth consideration relates to the car owner's demographic factors such as education, profession, or marital status when determining the rates. It is argued that one's demographics offer a reflection of how responsible a person is. The final four considerations that affect car insurance rates include the mileage driven, vehicle classification, and the terms and conditions issued by the insurance company. Interestingly, one's location also affects the rates chargeable. Justifying this, insurers argue that some regions have higher car collision and theft cases than others. As such, people located in the high-risk areas no doubt have to pay higher rates than those in areas considered